Good evening, folks. Good evening. Good evening.
Hello. Good evening. Welcome to the 15th. I said the 15th installment of Tequila Thursdays. The topic for this evening is going to be surviving tariffs and recession when businesses need capital the most. Again, my name is Darren Mills. I'm your host. To the right, I have
Jose Martinez, business development for Lemay Capital and Fun Rock Capital. To my right,
You got Sean McClellan, Lendmay Capital Business Financing Specialist, your favorite broker's favorite broker. Good evening, folks.
and
Alrighty, and for
Special
this is the second or third time
or last,
on the
Depending on how it
first
goes.
or last time on the podcast. To my left, I have the lovely and entertaining
Sarah Hussein.
That's it.
That's all you need to know.
All right, let's get a little music
Yeah,
going.
I do a lot of stuff over here.
Get a little music going. Episode 15,
All right.
live and direct.
Nice.
Woo.
We have a lot of great things.
Okay.
A lot of great stuff this evening.
I like this vibe.
Old school. Boom.
It's like a DJ Premier beat.
It is, right? All right, so opening remarks really quick. Let's get real. Business owners are, struggling right now. The cost of goods going up, supply chains are tightening, and the banks. Well, of course, the banks are definitely making it harder to get approved for a loan. If you're a broker, an investor, a business owner, this episode is definitely for you. Without access to capital, you're stuck. And in 2025, being stuck means that you're out. You're last to the party. So this evening we want to go over just a couple of different programs to go ahead and, I guess, in layman's terms, help you guys circumvent the traditional programs that people are used to going for and get to just some alternative financing routes for your clients, so we can make sure that we are maximizing them. We'll maximize your leads to the best of your capabilities, but also, again, people are always going to want just what they know, right? People know SBA, people know lines of credit, people know term loans, but again, people don't know the alternative finance, because to get approved for some of these loans, sometimes can be a little tough, right? But we have ways right now where you can get access to lines of credit and get access to term loans, much quicker than usual. So we're going to go over some of those programs this evening. Jose, something you want to add?
Yeah, no. And one thing we definitely want to talk about today is how our, because I'm sure everyone saw, the
State of the Union.
the State of the Union.
Yeah.
Thank you. The State of the Union, right? And how now tariffs, right? Everyone's concerned. Every business owner that we speak to, that's one of the things that they want to talk about. How can I adjust and prepare for, what's about to come, or what some companies right now are actually facing?
Yep.
Where it's just adapting to the price hikes in some cases, right? And we're going to review that as far as how it's affecting real estate, how it's going to affect, or if it's not affecting at the moment, business lending as well,
Yeah.
and also business owners, right? Because it's always great to understand what's going to happen and how to adjust, right? And the different programs that we currently have, from business revenue programs, which are merchant cash advances, traditional lines of credit, term loans, alternative lines of credit. That's why, the first half of today is just getting everything as far as business lending, and also too acknowledging some of the affiliates that have actually now funded a few deals.
Yeah.
I saw a few names on there. Congratulations to Trina, which is one of them.
Good, Trina.
Trina.
Congratulations.
Yes, Trina, and also too just talking about today's day to day. How you doing?
Was that you, Trina?
That was Trina.
Trina, round of applause, Trina. Listen, it was a little bit of a difficult one, but we got it done.
Yes.
And I think you have one more in the chamber right now.
Correct.
That actually just signed contracts this evening for $7,500, and he also completed bank verification. So in the morning, they're gonna refresh the login, make sure he hasn't taken money anywhere else, and as long as everything looks good, that deal will be funded tomorrow for you as well. So never to jinx it, but we're at the finish line with your other one.
Yes, and also too, Sarah, I think you had one. Who was the affiliate? I know that who was the affiliate that actually there was a line of credit that funded, I think, last week.
Yeah, we
Yeah.
actually have had success with lines of credit within the last month, I would say. We're on with a new bank. Not only are we able to do 0% interest credit cards with these banks, but either in conjunction or alternatively, we can get them line of credits directly from the bank. It took about 2 weeks in entirety from submission process to funding. A lot of clients, even though rates are on average 13% for the lines of credit, a lot of clients still want lines of credit and want the money in their bank account instead of the credit card. So
Yeah.
that's another option that we've had some success with, and we've actually funded a few clients already with the line of credit with this bank.
Yeah, tap up for that. Now, I do want to, just kind of, cut you off really quick, Sarah, because you were the first person on the floor to get that particular line of credit program done with that bank, which is phenomenal. And I know your ISO is definitely happy as hell we're able to get it done. Listen, ladies and gentlemen, we have alternative lines of credit that can fund in 24 hours, right? Before the line of credit that Sarah is speaking about, through the bank, took 2 weeks to get done, and the guy had access to it immediately. You know what I mean? And it's traditional bank rates. And usually anything with the bank takes about a month if you want to get a traditional term loan or line of credit. But the express line of credit and the express term loan that we have right now, we can get it done in 2 weeks. So, Sarah, I just want to clap it up again for you being able to make that happen.
And I just wanted to add that we leverage the bank statements when it comes to this line of credit specifically. A lot of line of credits, you need some tax returns, profitable returns. On the East Coast, some states were able to go ahead and leverage some healthy bank statements with, some positive daily ending balances. While we still need a 680 score, we can, play a little bit with the utilization. Doesn't have to be perfect at 20% or below because it really is dependent on some of the financials. But we do want that 680 score.
Now, hold on. You said bank statements. Now, is this an MCA?
No, everybody's been asking me after I get them the cards. They're all asking, "Oh, are you getting a bank statement?" Or some of you guys are asking me, "Are you guys going for an MCA?" Yeah. And no, that's not the case. I'm just exhausting all options for your clients, presenting them with all options. Yep.
Now, keep in mind, ladies and gentlemen, the reason why the banks do want to see bank statements is because they want to see affordability, right? Because, I mean, listen, most banks just ask for tax returns, P&L balance sheet. But how the hell are you going to make the payments, right? Yes. So now banks, a part of their tightening up process is they want to be able to look at your bank statements and make sure that you can afford the payments.
Yeah. They want to see those balances and they want to see what's coming in, what's coming out. I mean,
correct.
And also, too, even if they want a line of credit or a term loan and they have tax returns, we are able to go as low as $100,000 in gross revenue.
Ooh, say it again, Jose.
In that voice,
you didn't tell me that.
Say it in that exact voice.
$100,000.
Woohoo!
$100,000 in gross revenue. What happens is
now gross. That's annual, right?
That's annual, correct. So on the tax returns is the first line.
So that's like
line number one.
That's like less than $10,000 a month.
Correct.
Yeah,
correct. So $100,000, they're able to qualify for up to anywhere between 20 to 25% of that number. Okay, so we're starting, let's say $100,000, you get a $25,000 term loan or a line of credit. Next thing that they look at is whether the business at the bottom made an income, if it was profitable, or if the tax returns were negative. Reason why is because they want to show, let's say, as Darryl had mentioned, affordability. Right? Can they afford the payments? Because at the end of the day, they look at the tax returns to be able to show that they can afford the payment. Right? At the end of the day. And some banks only need tax returns, last 4 month statements, and an application.
Now keep in mind. Now, what Sean said before was awesome because average daily balances is a huge thing, guys. And the reason why it is, if you didn't know, average daily balances, if you look at the bank statements, because credit unions, they don't really have average daily balances at the bottom of the bank statements, right? Average daily balance is pretty much, you can see how they end the day every day for the month. Right. And then they just divide it by the number of business days of the month. So 20, 21, that's how much your average daily balances are. Now, what that is, it means how much money you keep in the account on average on a day throughout the entire month. So you could definitely deposit $100,000 on a monthly basis, but your average daily balances can be $500. You don't keep that much in the account. Right. Whatever goes in comes right, comes right back out of the account. right? So that's why average daily balances, banks are starting to look at that to kind of see your affordability. Because for the year, if they can see that you on average keep about $5,000 a day in the account, then if your monthly payment to them, your monthly obligations between $500 and $1,500, you are of minimal risk, right? So keep in mind, I don't know if you guys are really reading bank statements. It's not really your job to, but you should really have a understanding of what the hell you're dealing with, right? So average daily balance is usually most banks, Chase, Bank of America, Capital One, you can actually see them at the top of the bank statement to see average daily balance is calculated. Other than that, if you look at the bottom of the bank statement, you could just see how much money on average they keep, in their account. But not to nerd you guys out or bore you guys with those minor details. I did, we have run a podcast, so I want to speak to her a little bit more this evening, Sarah. As far as this new line of credit program, because you were the first one to get it done, did you feel like the process was easy? Did you feel like what was the most difficult part of the process, you would say, to get this done? Because I haven't done one yet. I'm gonna get one done soon. But like, what did you like really feel like about the process?
This actually was a
Oh, time out. Can we cheers first?
Cheers.
We cheers. We gotta cheers. We gotta cheers. Tequila Thursdays. Tequila Thursdays.
Get it.
We got the first lady of the company finally on.
There we go.
Cheers, cheers, cheers. So yeah, Sarah, tell us a little bit about it.
This was actually a client that somebody had referred over for the 0% interest credit cards. Like some clients just don't want the credit cards, like I said, for whatever reason, despite all the cashback incentives, the annual interest rate for the first year, the high credit limits, not having to provide documentation. Some just don't want it. So and that's the good thing about us here. We're able to pivot and get our clients whatever they're looking for. So he wanted something traditional. He qualified.
Yeah.
So it was a pretty smooth process. There were really no issues. They do have to walk in the bank for this particular bank on the East Coast.
Mm-hmm.
But we also have a bank on the West Coast as well that we can utilize a similar line of credit as well.
And now hold on. Now, really quick. Now, Sarah, on average, you get about 100 credit card submissions a month, right? For people that are looking for 0%. How do you how were you able to pivot from going from something that was 0% to now this is going to be a product that's going to have a traditional APR? How were you able just to make that seamless transition? Because they wanted it, but how are you just little insight?
Well, some people are worried about getting the funds off the card, so that's a way that they can go ahead and have them, the money dispersed into an account, being able to transfer it over to a bank account, and have access to it if they're not interested in MCAs. But I really qualify everyone that I come in contact with every program I can. And I really leave it up to the client because a lot of times they're interested in taking more than one product. Yeah. A lot of times, even though they think a merchant cash advance seems a little expensive or shorter term than they wanted, a lot of times after Darryl speaks with them, they go ahead and they take that MCA while we're waiting on some cards, and they can go ahead and pay off the MCA early, or they can get more MCCAs and, Darryl can do what he does. So I really present all options, lines of credit, loans, SBAs. A lot of people, I still submit them for SBAs and it takes a little bit longer. We're not the SBA, so we don't have control in entirety. So I like to fund simultaneous deals. That way there's always money coming in and, we present them with all options.
Nice.
And even push them over to real estate if need be, get them into credit repair if need be. So that's what I would suggest you guys do. Try to put all the options out there. I'm really not pushy. I present them with everything and they're bound to take at least one offer. So
clap it up for that. Okay, sorry, I interrupted you. No. What were you going to say?
Very good point. And also, too, I just wanted to make mention of that client. I think, Sarah, you had told me that he actually has a bank right across the street from him.
He does. Yep. So he was lucky enough to be able to walk across.
Nice. Sometimes the options are right in front of you.
They just don't know it.
But what happens is, and I mentioned to someone earlier as well, was that a business owner, their job is to go ahead and manage the business, make sure they have income coming in. Our job is to go ahead and understand what resources are available for these business owners. So it's always great to ask the questions, what we had mentioned before, the intake form, follow that, right? Because you're going to ask everything from what's the credit score, which is a question that a lot of people miss, right? Because they're thinking automatically about either a merchant cash advance or something revenue based because the client will have access to it quickly. That's great. You can offer gap financing, but also offer a takeout, offer an exit strategy, which is what Sarah did.
Yep.
And she recognized what programs the client would qualify for because she asked credit score. Do you have any revenue? You do. Perfect. Okay. What kind of bank statements do you have? And it wasn't just pivoting, or it wasn't just putting herself in the corner to just offering one product.
And a lot of you guys, you send over specifically for business or for real estate. This client actually, I'm hoping to maintain a relationship. He had a few properties. He
Yes.
was looking to maybe do a cash out refinance,
Nice.
maybe purchase some properties. So it's really about building your book of business, and logging it, whether you use an Excel, whether you like to write it on your notes or handwrite it. It's just important that for the way that you have your clients set up, that you have it organized so you can follow back up and you can tap back into those clients and they'll always remember you.
Yep. Oh, we just see Wayne. I guess, guys, Wayne can't hear.
Yeah, so I guess where you guys are live at, probably in the community. Oh, audio's good. Facebook Live. Okay.
Okay.
All right. Yeah. So, yeah, Joel,
Thank you,
Joel, thank you so much. Thank you so much for letting people know that they could listen on Facebook Live. No, but ladies and gentlemen, really, I mean, listen, Sarah is not afraid to ask you for your blood type. You know what I mean? She's gonna ask you all the questions. She's gonna get as many documents as you can. And again, it's just asking the questions.
Right.
If people want certain programs, they're gonna have to come up with the documents for it. If you don't want to provide a lot of documents, we have other programs for that.
Right.
So understand the rate's going to be a little higher, term's going to be a little shorter. But if you want the best possible rate, you want the longest possible term, we have those programs. You got to come up with the paperwork.
Right.
And you have to qualify.
Yeah,
We're going to approve clients for what they qualify for.
Correct. Now, Sean, what I wanted to ask you, because you started the month off hot, you know what I mean? You got a couple of deals done. Do you feel like you did anything different last month that you did in the first couple of days of this month to go ahead and get a couple of deals done? Or like what do you think it is?
Not really, man. I mean, it's just staying consistent. You know what I'm saying? You're gonna have your periods of time that things just don't fall in place immediately, but it's just being consistent and staying to the grind. You know what I'm saying?
Yeah.
And I wanted to add on too. I think the reason why Sarah's been very successful is because she explains everything to people. She sets a proper expectation and then also lets people know why they're qualified for a certain program and the advantages of that. So that's a big key is presenting to people, because a lot of times people will get an offer somebody, but they just have the offer and present it to them, but they don't explain why they were qualified for what they were. So sometimes going a little more details to let people know how underwriters look at files makes a huge difference, so they understand why they got what they got and why it works for them.
That's true.
Now, Jose, do you feel like, because I know towards the end of last year, just after the presidential election, I know people were afraid to borrow. People didn't really know where the economy was going to be, and people were afraid to borrow. I've heard you on the phone a lot over the last week or so. You've been on the phone.
I didn't even know where I was going to be.
Well, now we know. You're sitting right here next to me on another Thursday.
Right.
No, but do you feel like people are starting to settle in, like they're not really that apprehensive about taking money anymore, like they're looking to explore options? What do you feel like the climate kind of is?
Yeah, well, 100%. People were a little bit more conservative, right?
Yeah.
Because they didn't understand what was going to happen, in what direction the country was going to go. But I think now everyone is understanding that there's prosperity. To be honest with you, they're going to be putting everything all right. So now everyone is starting to feel comfortable because they are starting to borrow. I mean, that's the only thing I can base it off of, is they're starting to borrow. They're starting to borrow money. Also, too, banks are now starting to loosen up as far as their guidelines.
Yeah.
Right. So that's very important. I mean, one of the things is that there's a national bank that just received access to, I think it was, what was that, $5 billion?
Yeah. Yep.
50 billion.
50.
My apologies. I was off by zero. $50 billion. And
Wow.
that's huge. That's huge, because now that means that they're starting to feel comfortable if now they have that warehouse facility. Now, keep in mind, banks have to put that money out.
Right.
Mhm.
So if they have access to it, now it has to go out. It has to get for owners to be able to access. And that's, I think, one of the things that we have is we are able to identify how to gain access to it, right? By understanding the guidelines
Mm.
and understanding the processes. And that's why, Sarah's line of credit that funded, it was great because now they loosen up. Think about when before did you get a line of credit with just bank statements and an application?
Yeah.
You needed tax returns, you needed a profit and loss, you needed a balance sheet.
If you want traditional bank rates.
Yeah.
Correct.
Yeah.
Correct, right? And then the rate was, I believe, 13%.
Yeah.
Yeah, it's
APR.
wild.
Yeah.
It's wild.
And that's a revolving
Yeah.
line of credit, correct?
And a revolving line of credit.
So
correct.
what's the difference between like a regular line of credit and like a revolving line of credit?
Well, they're the same.
A line of credit.
They
is
are.
revolving.
Oh, but listen, there's
Yeah.
trigger words, so I just want to make
So-
sure everything's
so-
still the same.
Sarah?
Yeah, just a line of credit just means you have access to the funds and you continuously will as long as you make payments to replenish it.
And if you don't need it, you don't have to use it. It's still
Mhm.
available to you. Think of a line of credit as I always tell it to put it into perspective. Think of a line of credit as a credit card, so to speak, right?
Mm.
Where instead of you having to use plastic to swipe, you grab the money and you transfer it to your bank account.
That's it.
And that's the big difference, right? Some people, as Sarah mentioned before, some people do not want to take a 0% business credit card. However, the reason why is because they don't understand how to properly use it. In my experience is take both,
Mhm.
because a 0% card, just like a regular card, you get cash back incentives, you get points, you receive additional perks that some people that don't have a credit card, forget about the benefit of a 0% interest card. Think of just the perks. Some of these banks, as long as you spend X amount of money within the first 3 months, they'll give you anywhere
Bonuses,
between
yeah,
$750 to $1,500 cash back.
Yeah.
So it is always an incentive. I had a client give me a call because he was finally able to take out his wife on vacation because he accumulated so many points, right? And now even on the personal side, I don't know if you guys know this, but there's a company called Built, right, where their whole big promotion is pay your rent with a credit card. You get points.
Yeah.
So credit card really is now becoming because it's accessible to a lot of people.
Yeah.
Now it's becoming pretty popular. It's just understanding how to use it, just
Yeah.
like everything else.
And people need to remember credit cards, it's not the same how it was 30 years ago now. You can use it online for just about anything. You don't have to be in person to swipe the card just to use it. There's so
Yeah.
many different outlets to make it more flexible. So, credit cards have evolved,
And on the real estate side for investors, right? You go you purchase sheetrock material,
Yeah.
Home Depot, swipe the card.
Yeah.
You understand the card is there for a reason. 0% interest for the first 12 months. Everyone's objection at times is, you know what, I can't access the money. In some cases, understand why you can't access the money or why you can't get a line of credit is because you don't have the financials to do it.
That's it.
So let's work together on how to get you to the point where now you bring revenue into the business and then you can access the programs. It also builds your business credit as well.
Yeah, ladies and gentlemen. I mean, listen. If you don't have a funding strategy in 2025, you're pretty much playing Russian roulette with your business, right? And what we actually watched, a video the other day, and what did that guy say, Jose? I think he said something like, as long as you're fundable, you'll never be broke, right?
Correct, yes.
As long as you have access to cash, and as long as someone feels like you are bankable, you can never be broke, right?
True.
The thing is, when people are uncertain of when they really don't have a business plan, they don't take the money. They shouldn't, right? But the people that have smart business plans, always trying to scale, always trying to grow. I mean, listen, using other people's money is the best way. It's less riskier, and again, it just has to make sense.
Right.
What happens is when people come to us and they really don't have a need for the money, well, those are the hardest people to really offer programs to because they're so rate conscious. They don't really have a need. They don't have a time frame. Those are the toughest people to really get done. You know what I mean? You want to
Also,
feedback?
yes, actually, I just read something on the paper here, and it's true. We forgot to mention. A business credit card is an alternative as long as the client has a 680 score. Is an alternative to funding, but it's so they don't care. A business credit cards for you to get approved. It doesn't matter if you defaulted on a cash advance, right? On
Yes.
something short term. So that's very important. It obviously it doesn't care if you have revenue. It doesn't care if you have tax returns. It doesn't. They don't really look at if there's any UCC liens filed. They don't look at what else don't they look at? They don't look at revenue defaults. They don't look at if you have profitable a P&L balance sheet, etc.
And you can be a fairly new business and we can still get you at least around 50K, depending on the bank. But yeah, so that's definitely a positive that people that just start their businesses, we can get them some 0% credit cards, get their foot in the door, build a relationship with the bank, while they're getting their bank statements in order, filing tax returns, and just growing, giving them something. That's why when people always say, "Oh, is there startup funding?" This is where we would put them. So if people
Yeah.
ask you guys that, you can point them towards this direction.
And ladies and gentlemen, understand that the leads that everybody's calling are pretty much the same leads, right? Every lead source is in heavy competition. When you speak to these people, they just think that you're trying to offer them daily or weekly payments. That's it. So your introductory lines on these phone calls, really has to be something along the lines of, "Hey, Mr. Jones, listen, I see you were looking for, funding in the past. You're only getting to offer daily or weekly payments. We have multiple different funding options and monthly payments for you. Quick question, what's your credit score?" Open it up like that. The person that has the 500 score knows that they're only getting daily or weekly payments. Trust me, they know. You don't have to sugarcoat nothing. They know. But the person that has like a little bit of a better credit score, you can have a different conversation with. Now, that doesn't mean that the guy with the good credit score won't take an MCA. Understand that. It's all about how soon they need the money, right? And what they need the money for. So don't just straight pivot to, credit cards or straight up pivot to a line of credit or term loan. It's all about how soon they need the money. So if they need the money tomorrow, I don't care if you want a line of credit. That line of credit doesn't work for you. Okay. So it's all about what they need and how soon they need the funds.
Daryl, quick question. What are
Yeah.
the what are and I guess for everyone, Daryl, Sean, and Sarah, I'm sorry. What are the
Tequila, there's this.
objections? What are the objections that you guys face, the guys and girls face, when you speak to the client? I guess what is the common objection that you face?
Sean, you want to tackle this one first?
Well, yeah, I was
Sure.
gonna say the first one. A lot of you, I'm sure you're coming across, is just I'm good, right? That's what you hear from the business owner. I'm good, right? So what does that mean? I'm good. They're trying to say that they don't have a need at the moment. Things are going well. And again, we touched on this last week. When someone's doing good, that's the best time to get them funding, right? Not when they ran into a slow month, slow season, and now their revenue's on the decline. They maxed out their utilization. No, that's the best time to have something to put in their back pocket to not only get them through the slower seasons, but to scale their business to the next level.
Nice. Yeah. How about yourself, Daryl? What is your objection when the client says, "I'm good"?
Well, I haven't really been getting too much of that, but some of the objection that I have been getting is I only want a line of credit, right? And again, that's something that just comes with the territory of in business lending, right? People just know trigger words. I want a term loan. I want a line of credit. To me, what that really means is that they took an MCA before, they got a daily or weekly payment, and they didn't use the money for what they said they were, and they ran into a little bit of trouble. That's what that means to me, right? Or there's somebody that doesn't really need the money. They just want to know that they have access to it. That's really what line of credit means. Line of credit, people,
No urgency, right?
Yeah, people just want lines of credit because they just want to know that they have access to funds whenever they need it, right? But I mean, if we're a financial marketplace and we can always get you money, then everything could be a line of credit. It's all about how you present it to them. That's why it always comes down to need. What do you need? How soon do you need it? Because guys, even with a line of credit, everything has a minimum draw, right? Some of these lines of credit, you have the minimum draw of 10%. So if you get approved for 50K, you got to take 5K out. So what's the difference? Yep. Somebody said something? No? Okay. Well, so what's the difference between, like, if you only need 5K today, what's the difference between you getting a line of credit or five?
I just want to add, I apologize. I want to add, if you guys have any questions, please put it in the comment section. Go ahead, Darren. I'm sorry.
Yeah. But yeah, so I mean, listen, if you need 50K today, then you don't need necessarily a line of credit. You could take something revenue based, right? It's all about need. It's all about how soon you need it. If you really don't have a need for the money, yeah, I'll send you an email. Yeah, we'll get you a line of credit. There's no real sense of urgency. So again, it's all about how you present the deals to the client. Some people need money today, but they tell you that they want a line of credit. They just want to know that if they take money today and they need money next week, that there's an option for them, which we have. It's all about having a conversation. What about you, Sarah? What's some of the objections?
What is your rebuttal?
To what?
I want a line of credit.
Oh, okay. No problem. You need a line of credit. How much do you need in the next 24 to 48 hours?
$50,000.
$50,000. Great. What type of business you own again, Mr. Martinowitz?
Construction company.
Construction company. Great. Now, are you like in the middle of a job or contract or something like that?
Yes, I am. I'm preparing for the next job that I have coming up. I got to buy material. I have to buy materials.
Wait, so are you in the middle of one or preparing for the next one?
No,
What do
no,
you?
I'm actually preparing for one. I'm finishing one up, but I can't wait because they're going to take 30 to 60 days to pay me. So
Gotcha.
I need to prepare for the next one.
So what you're saying is that you need like a little bridge to kind of hold you over until the next project till you get paid, right?
Exactly, but not a cash advance. I don't want to pay daily or weekly.
You don't want to pay daily week. Okay, no problem. Let me ask you a question. What's your credit score?
680.
Your 680 credit score. Okay. Now you need money rather quickly. Okay. Now you said cash advance, which means that you've probably have taken one of these before. You probably have taken a daily or weekly payment before. Is that correct?
That is correct. They call me all the time.
Great. All right. Let me ask you, what can you afford to pay monthly?
$1,500.
$1,500 a month. Okay. So that means, and how much do you need?
50,000.
50,000. Okay. So that means that you're looking for something 5 years. Honestly, got to tell you something 5 years, I can't have funded within the next couple of days or so in which you need the money. But let me ask you, if I was able to go ahead and put numbers in front of you that was appealing, and I was able to go ahead and get you something that was minuscule on a weekly basis, that's something that you would entertain.
Is it a monthly payment?
No, I just said on a weekly basis. Is that something that you would entertain? Because not for nothing, if you don't have the money to float into your next job, you're beat on the next job. What is the Mr. Martinowitz?
Yes.
What is the opportunity cost if you don't get that 50K?
I'm bound to make
no, but you're not gonna make anything because you don't have the money to float you into the next job. But listen, let me put some numbers in front of you to go ahead and again, listen, no obligation. If you don't like it, no problem. But I'm sure that you're gonna make X amount on this job. How much are you gonna make on this job if I'm able to get you this 50K?
110,000.
Perfect. So that means that after you've paid me back over the next couple of months, all that other 60K you're gonna make is all profit. I'm sure you're not gonna drop 60K on the floor and not pick it up, right?
Why have you put it like that?
Oh, I will put it like that. Trust me.
Somebody ring that bell.
No, but ladies and gentlemen, listen, that's a little role play with me and my boy over here. But no, seriously, but it's about the straight line. Listen, at the end of the day, he's telling me he needs money in 24 to 48 hours. So nothing long term is gonna happen.
Correct.
Okay, it's not an option. What is the opportunity cost? If I don't get you this 50K, how much are you gonna be losing out on? It's gonna be losing out on a total of 110,000, right? So it's just about presenting to him what we already know.
Also, too, one of the things that I would always do is what he did was what's the month? How much do you want to spend a month? Right, 1,500. Everything, as Daryl mentioned, is all about perspective, how you present it to someone. So if my concern is the monthly payment, no problem. Well, let me ask you a question. What if I charge you the monthly payment up front? Would you be okay with that? Most people would say yes. Okay, what if I can go ahead and still charge you that monthly payment? But honestly, Mr. Jones, for your benefit, I don't want you to be in a crunch. Let me break it up for you into weekly payments, 4 weeks. So you're still paying $1,500. Let me break that up for you for 4. As a matter of fact, let me even make it easier for you because looking at the bank statements, looking at how much money comes in, how much money you have at the end of the month, let me break that down to you into 20 installments. So you're still getting the payment you want for your benefit. What I'm doing, I'm just breaking it down for convenience for yourself. Perspective.
Yep.
Who's going to say no to that? You just told me you want to pay $1,500. I've hit the $1,500 mark. If whatever number it is. Now let me just break that down for you. Right now, then on top of that, it's just the cost of money. One thing that also I would have added to that is, and I think Daryl was going to get to that point, was if I'm constantly in the need for money, if I get you a term loan, I lock you in for 5 years.
You can't take more money.
So Mr. Jones, a term loan, to be honest with you, based on what you're telling me, is that now it makes no sense. Because get them into the yes mode, right? Ask them, well, number one, is your business growing? Who's right? And you always need access to capital, right?
Am I right?
Yes. They're never going to say their business not growing. As a smart business owner, don't you need to know all options? Yeah, no one's going to say they're a dumb business owner. Yes, I do. Okay, so this is a no cost, no obligation product. Let me get the options in front of you. At the end of the day, you don't like what I present, we can just part as friends. That's it. We're done. And then it's just putting options in front of them and then giving them the option that they qualify for. We're not just a one product company. Like as Daryl mentioned before, we're a financial marketplace. So we offer several different products. We can offer you gap financing and present an exit strategy. As you mentioned before, let me get you a cash advance. Cash advance is going to fill the gap so you don't lose that job. But then you have the credit score. I'm going to put you into something longer term if you want, or an SBA. And that's going to benefit you later on down the lines. It's just presenting a roadmap.
You know what I also kind of wanted to pivot to, because, Sarah also does, real estate and mortgages, right? because I've never done it before, Sarah, but I hear you on the phone all the time taking a lot of this information over the phone. I don't know if some of you, some of our ISOs or members of Broker Connection out there are filling out the actual Fun Rock Pricer link for people. But Sarah, what is what's some advice that you could kind of give to people to just take like the extra second and just fill out the Pricer on the phone with people? Like, do you feel like it's easier to just fill it out on the phone with people, or just send them the link and just wait for it to come in? What do you feel like is like a little bit easier for you from your perspective?
Yeah, we actually funded a mortgage last week.
Oh,
Me
okay.
and Stanley.
Nice, Stanley.
Oh, Stanley.
And we did a cash out refinance. But yeah, so when it comes to real estate, it's really important that we have all the information correct, the payoff, the current value of the home. So it's super important for us to have any information to be able to give any type of rates. People on the phone always want to talk about rates prior to giving any information. But it's just unrealistic because we have a lot of programs here. We have programs where we can fund you if you have a low credit score as well, but it would lower the LTV. So of course we want to make sure all information is accurate before submitting you, because we can get it done, but we don't want to quote you too high or misquote you. On the phone before we have any information. Some people don't even tell me what kind of deal they want to do.
There's no one size fits all.
And so, I'm still learning. I passed the phone to Joe, and he has the same answer I do, which is that if you guys don't fill out the application for us, it's hard for us to go ahead and give you any type of information on rates or quotes. And it actually, it helps all of our loan officers in here just keep everything organized and get everything submitted quickly. As soon as we have that, it triggers our back office to go ahead and get your deal submitted. So it's super important in terms of our processes here that we complete it more so than anything.
Yeah, Sarah's a Swiss Army knife. Definitely, she knows a lot. She's been with us for quite some time.
But like the opportunity cost, I've learned so much from Stan, even when it comes to investment properties. Like,
our rates can vary from 8s to 13s. I'm like, Stan, why these people have money? Why would they want it? Why would they want their rate to be high? Stanley's like, what do they care if they're profiting every month? If they're getting their mortgage paid for, they're still renting out their property.
Yeah.
And they need cash on hand. So just learning to utilize equity and, different things that the client have.
Putting it in proper perspective for them. That's
Yeah.
really what it is.
Yeah.
What do you think, Stan?
Yeah, what do you think, Stanley?
Go ahead, man.
Ladies and gentlemen, that's Stanley over there. Listen, hold on really quick. Next week, we're going to make sure that we have a light over there. Stanley's a little dark in the corner over there. Next week, we'll make sure we have a light focused right on him. Oh, here we go. Right now, look.
There we go.
There we go. Right in his eye. Oh, not again. There we go. All right, so Stanley, why don't you tell us,
just playing off of what Sarah was saying, she's 100% right. Because if we have two apps coming in, and the person that takes the time to give us the proper information so we can assess it, that's the person we're going to focus on. Because right there, just by completing an application, we can see how serious you are to get it done.
Yeah.
Because we get, trust me, we get apps in all the time, and we have a pipeline saying missing information, missing dots. Now, if I have a client that's like, I did what you told me to, I checked all the boxes, I answered all the questions you needed, I gave you all the documents, that's someone's ready to go.
Right.
And just let's be honest, no matter what you do for a living, subliminally, that person deserves your time because they took the time to follow your protocol to get the results they're looking for. Because I know for a fact when you go to the doctors and they give you that clipboard and they ask you to fill out all the questions, you don't hand it back with just two answers.
Yeah.
And leave out
And
do
expect a
something.
diagnosis.
Exactly.
Right.
Except do stuff from heartburn. You don't leave it blank because even though you don't even know exactly why they're answering, the professional. You trust them enough to go to their office or do business with them. So you want to give them the respect of giving the information they need so they could do their job efficiently and correct. That's all we're asking. We'll never ask you for one more question than we need, not for one more document we need, because our goal is to get you from app to funded as soon as possible. No matter if it's a no doc, no matter if it's business lending, real estate, credit repair, you should time yourself, even talking to a client, or even for your own deals. The moment you say yes and start the process, you should be looking to close the next day. But the only way that happens is the way that file comes in. Is that your Uber, Sam? I wish. It's the way the file goes in. I learned this from a guy, a trainer, right?
Mhm.
Or dietitian. They'll tell you shitty food in, shitty food out, right? So if you submit a clean file, and I'm not saying just credit score, I'm not saying just actually do what you submit the way you're supposed to, you'll get the result as quick as you want it. So you can't expect to get a business loan in the am I approved in 24 hours if your Experian, TransUnion, or Equifax are locked because we can't see the score. You can't expect. I apologize. It's a affiliate, not affiliate. One of my
It's
affiliate right now. I know.
Pick up.
Right? I know I'm gonna be on a while.
Are they on the call?
Not at all right now. Right? I was actually waiting for this call, then I got drug in. But yeah, right. So, good.
You're doing great, Stan. Thanks for joining the.
Let me make my point.
Everyone.
My point being is that when we do an assessment, we need to finish the assessment.
Correct.
Right.
So part of it is having your credit unlocked, making sure the documents you send are eligible.
Right.
All documents you send in, we have to be able to see all four corners. And I'm not saying hovering above your bed 15 feet while you're taking a picture. Try to make it tight and let's get all four corners. If you're submitting a bank statement and it says it has 4 pages, don't just give me the 3 pages that have writing. I want all 4 pages. Why? Because we don't know what's on it. Business lending, do not give us a transaction history. We need to know all transactions going in and out. And it benefits you too. It's not just about getting approval. If it doesn't work, you stop working on it. Get it off your desk, go to another deal. But if you're saying it's just a transaction history, how do we really assess the deal? We don't know what's going in on certain transactions. We don't know what's going out.
Yep.
Certain clients want to hide big transactions that they can't
Balances,
explain.
yeah.
Loans that they want to act like deposits. Trust me, we've seen everything.
And Stanley, the biggest thing with people sending transaction history and not sending actual bank statements, just like Sean said, we can't see how much money they keep in the account. There's no running average daily balances. So we can't tell. But Stanley, listen, I know we have you for a limited time, really quick. Just pivoting back to the beginning of the podcast, because you deal with builders all day and all night. That's all, whenever I walk by your office, that's all I hear you were dealing with builders. And you're just your experience.
Well, let me pause you on that. We had a management decision as of this morning. Right now, we're pausing our new construction program because of what's going on in the world right now.
Which is what?
With the tariffs potential tariffs and what they mean in regards to Canada, Mexico, and internationally.
Okay.
It's not a decision we take lightly, but we've already started feeling the ripple effects of our developers going, our costs just went through the roof 10% without even blinking an eye. And they don't know how far it's going to run. They don't know if it's short term, long term. And the last thing I want to do, you want to do, or your client start working on a file, think you're about to close, and all of a sudden the numbers go haywire and you waste your time.
Yeah.
So out of respect for your time and our time, I think it will be better used on products that will be less impacted by the tariffs, meaning DSCR, rental property loans. Yes, cost of goods will go up, but rent is rent. Rent will keep going up depending on your respective market, 10% plus annually. We're going to focus on fix and flips, right? So let's say your budget is $100,000. On fix and flips, on average, you're going to be looking at returns of $80,000, $100 plus. So let's say worst case situation, you have a $100,000 budget, and your material costs inflate, your costs inflate by 10, 15%. That's $10,000, $15,000. A good flip is still a good flip. So we know by the time we start the project to the time it ends, most likely the deal that you loved at the beginning will still be the deal you love at the end. We don't have the confidence at this moment to say, guys, let's push new construction, let's push new development because you're going to get this paid on this commission.
Right.
Or if you are a builder on right now, or contractor coming on saying, you know what, we're going to find you this lender and we could be halfway through, and depend on the economics of the world, all of a sudden, it happens all the day, the program gets pulled.
Yep.
Because every day lenders assess their risk factor in the market between capital cost of capital,
Right.
material costs, and project completion. So the deal a lender will love today, they might not love in 30 days.
Right.
And perfect example is COVID. That was no matter if you believe the origin or what it was, the reality is when COVID hit, material costs went up through the roof and no one had control. It left to the countries that had the material, the shipping companies that shipped it, the cost, the manpower, the cost of labor to bring it to the store, and then all the taxes and everything on top of that.
This is not a political statement. We don't know if it's going to affect the economy in 30 days, in 12 months, or what the ripple effect will happen. But as a company, it's sustainable and still offer you products like the 100% financing, the 90% financing, the 90% purchase DSCR, the 85% DSCR cash out, to be able to offer you, as we let you guys know before, that now we're direct lenders and be able to lend out our capital to our members and keep you sustainable during this volatile time. Just being fiscally responsible, that's a decision we made for you. And if you look at the numbers, there's way more DSCR opportunities in fix and flip than they are new construction and new development.
Correct.
We're here to make you win. It's not just about, yo, let me grab this deal. We want to help you build a sustainable business that you could feed yourself, your family, your future, and then generations above that.
I'm gonna clap it up for that, Stanley. And you know what? That was pivotal. And ladies and gentlemen, again, understand we're able to make those kind of executive decisions, not for you, but as a suggestion to you. And reality is this: we only want to do stuff that's going to get you paid. I mean, we're not in the business of pushing paper or even selling hopes and dreams. If you don't qualify, you don't qualify. If this program is working and everyone's making money on it, and you're trying to sell this program over here, we're gonna have to tell you, hey, listen, Sally, it's not working, right? Why don't you come over here, start trying to market for this? Why don't you try to have those different conversations? Listen to people that are trying to build a building in Idaho. Sorry, it's not working right now. Let's try to focus on this and just let the deal go. Those clients are gonna I know my guy Sean McConaughey is in here. My guy Sean McConaughey, most submissions again for the week. You know, Sean pivots a lot, right? We're jumping on the phone all the time, and we're telling his clients right off the bat, listen, this is not working. We can't get it done. And it takes a lot of time to follow up with these people. They ask you a million questions a day. Again, understand these people right now are desperate. Builders are hurting right now. So again, they're out, and a lot of people are shunning them, right? So you don't take it personal, like you can't get it done.
Don't say shun, because we don't want people scared of those deals. Just don't say shun. Just for us right now as a company to serve our community. That's where we want to stand.
Ladies and
I don't
gentlemen,
want to put fear into the real estate market that people have right now. You know what I mean? I just want to say for us right now, so we can serve you guys, and we see the reaction from our community. We see what deals you're submitting. We want to make sure we have the liquidity to fund your deals and get them done, because you're our priority, not the other company, not other clients outside and what they want to do.
Come to death row.
Exactly. If you're dealing with us, we will make sure we can service you 100%. Right. Like Joel was asking right now, Joel's asking, there's a correction I have to make. How many DSCR refines can one client have? We don't have a limit. As long as you have the liquidity, the experience, and the numbers make sense, we'll fund it. On the fix and flip, our cap isn't 3. It's 300% financing flips at the same time. Our fix and flip 90, which I repeat, 90% on the purchase. You cover 10% down payment and closing costs. We cover 100% of the renovation budget. We also cover 100% of all the monthly payments for 12 months. Ooh. And we don't give you a draw. We advance you 25% of your rehab cost. That and my limit per loan is $5 million a piece. These are the unicorn deals that really, I think, add value to the community. And I don't care if it's not in the community, in the space, period. But we offer it to you. And that goes back to the new construction that Daryl mentioned and development. With those unique deals that we're getting an influx of business, we have to keep the liquidity for you guys so you can either do your own deals or you could build your business so we could fund those and build your brand.
Nice, Stanley. Really quick, Stanley, you don't have the headset on, so you can hear. I just clapped it up for you, bro. Okay. Really quick, I see Isaac. Isaac had a question. Is there an initial hard or soft credit pull for business and personal loans? Jose, you want to take that?
It's a soft credit pull. We are directly aligned with Experian. So all we really need in order for us to do a soft credit pull is first name, last name, home address. In some cases, we don't even need social security number unless your name is common. Jose Martinez, there's a lot of Jose Martinez. But what it does is checks public record. But yes, if you want to get more accurate, we do request a social. But as long as we have the client's consent, we are able to go ahead and pull their credit score, and it is a soft credit pull.
You want to read Sean's comment really quick? Sean said, "Is the moratorium?
Moratorium.
Yeah, watch it. I was like, is there a moratorium on new constructions for all applications that were submitted before this morning?
No. So everything that
Is in the
Stanley,
pipeline?
that's in the pipeline that Stanley Joe have been working on is still being worked on as we speak. As Stanley said, just to summarize, and what Daryl said is, we have a responsibility to you guys to make sure that, number one, if you're investing your money, the first thing that we want to do is to be able to make sure that you're closing deals.
Right.
A new construction, to be honest with you,
It take forever.
they're going to take forever. I mean, I've spoken to a lot of people in the space where it takes 2 or 3 years. Unless you guys can wait that long, then let's go for it. But I really don't think you can. So our objective in the very beginning, especially as you're joining Brokers Connection, is let's get you paid. Sean, your deal should be closing. Stanley and I have a bet. He's telling me he can get it closed next week. Which is great. I'm I really don't feel that confident, but he is working. He has title. I think he have closing disclosures. He's really working with James to get this done. And remember, it's 1.2 million.
Clap it up for that. Clap it up for that.
1.2 million. I think now we're at the 2-week mark, or is it the 1 week mark? I got to double check. It's a 1 week mark. I believe 1 week mark, because last podcast he didn't. We were talking about it. So I think it's only been 1 week, and he's aiming to close this deal in 2 weeks, 1.2 million. So let me ask you a question. You want to do a 1.2 million or a $60 million deal that's going to take a year and a half, or you want to focus on deals that are going to close in a week or 2 weeks,
Right.
2 week time frame?
And that's what it is. It's not about we can't do it. It's why not focus on things? You can put those on.
You want to see closer to the mic?
Sorry about that. I'm just saying, like, it's not saying that, okay, don't ever offer those, or if somebody says they have that kind of deal, to just cut them off. No, but we want to see everybody get paid in a timely manner. So make your focus something that's going to close in a realistic time frame, right? If you come across somebody, yeah, that's fine. That's doing the construction, but let them know. It might take 2, 3, 4 months to get it done. But at the end of the day, do you really want to wait that long for something to get paid? So put it on the back burner. You talk to them, let them know, set the proper expectation, but don't make that your primary focus.
Let's focus on fix and flips and DSCRs. You want to be able to close deals in
a month,
a week,
Yeah,
2 weeks,
yeah.
3
Yeah.
weeks. Unless it's business lending where you're closing it in 24 hours.
Right.
Yeah. One of the things that I definitely wanted to, because obviously we have like 20 minutes left. Listen again, ladies and gentlemen, any questions that you guys have, any questions, concerns, please, like, you guys have any kind of questions, let us know. But I like to go over like sales training, a little bit of scenarios.
A little role play.
Yeah, for people, and again, because we don't really. I mean, are you guys even using the intake sheet that we have provided, that we went over, I think, last week or the week before? How are you guys starting the conversations with these people? Because again,
Trina, can we use you as an example? I know that you and I spoke several different times. If she's still there.
Trina.
Yes, okay. So can we use you as an example? And I guess what Daryl asks is, how are you getting leads? Or she's
No,
caller.
Trina, I know you're pounding the phones. I know you are.
Yes.
Right. What I want to know from you, my dear, is what do you say when you get John on the phone? Hey, John, this is Trina. What do you say? How do you attack that lead? Mhm. We kind of lost you, Trina. Sounds like you're in
They
somewhere
were looking for business funding.
Yeah.
And how much money were they looking for, right?
Okay.
Assuming the sale.
Yeah, you're just going in and out.
It's a little muffled.
And the first thing that I'm sorry, just like Sean said, you're assuming the sale.
Yeah.
That's very important. Very good pointing it out, Sean. So go ahead, Trina. I'm sorry.
Mm-hmm. Yes.
Okay.
Yes. Hmm. Yes.
Okay.
Yes.
Very good.
That's key.
Cut right to the chase.
Yeah. And just by listening to Trina, I can just tell the way she speaks to people
Yeah.
is
She's
very,
a hustler. What do you mean? Yeah,
no,
dude.
it's very
Yeah.
it's very welcoming.
Yes.
And she speaks with conviction. You know what I'm saying?
That's
Like,
confidence.
Yeah, because you know what you're talking about. You believe in the product. You know what I mean? And that's huge. Sarah, really quick, because you definitely make, some of the most dials on a daily basis here on the floor. I know your intro pitch is great and you don't have to do it, but like how do you kind of, I guess, just open up the discussion to try to pinpoint what product people are looking for?
Well, lucky for me, some of the leads here I have a little bit of information on. So I can, if I'm calling for a real estate lead, I can drop the address or drop the type of program they were looking to get into. So when you have a little bit of information, you can use what you have. If you have their credit score, you can start off with, what's your credit score? We have credit-based options up to 150,000 in 0% credit cards, SBA loans, lines of credit. I throw out keywords, especially not using revenue-based funding sometimes, just so they know we have all options. We do have, you know, MCAs, but we have a bunch of other options. So I name drop a few, and it depends what I'm calling for. If I'm calling for business financing or real estate, but then of course, if they say they're not interested, I always say, hey, well, we have another department if
Yeah.
you are interested. So I think it's important. I think one of our colleagues here, he's been actually he submitted a few real estate deals too, and he's does MCA's debt consolidation, but he also has been submitting real estate deals this weekend as well. And that's
Yeah.
because if they have low credit scores and they're looking for some sort of cash out refi and there's some equity in the property, we're usually able to get it done.
Yeah.
Yeah.
And again, ladies and gentlemen, it's all about just having the understanding of the products,
Yes.
right? We do this on a daily basis. We have things all up over our office that reminds us of the programs and what the qualifications are, right? I don't know how everybody's home office is set up, or even if you do it at a home office, but have the programs up, at least like minimum qualifications. So when you're speaking with someone, you're able to, one, have an intelligent conversation, but two, just be able to know how you can pivot. A guy that has an 800 credit score is not necessarily going to want or need a line of credit or term loan. Everybody wants it, needs it, but what if the guy needs the money tomorrow, right? Or what if the guy doesn't really have an immediate need and he just doesn't care? He's like, hey, listen, I'm trying to buy a building. I can wait. You know what I mean? We always have to be able to pivot to the other products. Jose, one of the main things that this evening that I wanted to discuss on the podcast, because you're always out and you're always making relationships with different bankers, always getting us different programs. With the 50K line of credit that Sarah just funded, a lot of people want to know, are these lines of credit that are coming from these banks that cap out at 50K, do they have UCCs, or do they report, or are other lending financial institutions going to know that they took that unsecured money?
Very good question. So no, the answer is no. The reason why you want to keep it at 50,000 is because it's what they call unsecured, right? Most people think that it means that they're not secured by real estate, and that's not the case. Unsecured meaning there's no UCC filing, right? So if there's no UCC filing, then what that means is that now they're not looking at other UCCs. Remember, these are traditional banks. Majority of the time, depending on how much money they lend, they need to pay off UCC liens and become first position. Okay. So now they no longer have to do that. They don't have to pay off SBAs. They don't have to pay off another bank loan that you may have. They don't have to pay off let's call it existing cash advances that either they have at the moment or maybe defaulted. Right. They don't have to pay all of that off. So now it's kind of like setting you up for I don't want to say a fresh start, because it really isn't, but it's giving you other programs that now you have access to purchase the inventory. Maybe these types of programs are not the ones to pay off other debt, right?
Yeah.
But as a business owner, I'm sure that you're always in need to purchase inventory, and that's the reason why you want capital, or your business is growing, so that's the reason why you're looking for capital as well. So just understanding the need, as Daryl mentioned, but
Yeah.
no, it means that there's no UCC filing, meaning that you don't have to, the bank does not have to be in the first position.
Nice. And just like you said before, it means that they don't have to pay off a lot of debt. Listen, reality is this. What happens is a lot of people take some of these short-term, revenue-based financing deals. They end up getting like 5, 6, 7, sometimes even eight positions, deep into the MCA hole, you want to say, right?
Deep.
Once they're at that point, there's only a couple of different options that they can go ahead and do. Now, an SBA or any kind of bank is going to want to be in first position. What does that mean? They're going to want to take out every single other filing that any other UCC filing that you guys have. They're going to want to come in. They're going to want to pay everybody off. But I mean, if your debt is $750,000 and you only make $500,000 a year, I mean, we're not going to be able to get you a term loan to pay all that off, right? And that's why Jose said, hey, listen, just pivot, just do the 50K line of credit, just get it out the door. It's done in 2 weeks. Sarah already had mentioned how easy it is to get done. So you get all the docs, you get it done. Everybody is going to be happy to have 50K laying around. Trust me. I don't care who you are. 50K at 13% APR, that if you use 10,000 of it and then I pay 10,000 at the end of the month, that 10,000 goes right back into the line. It's available for use.
Daryl,
It's a
I just
no-brainer.
want to add that it's also an interest-only payment. They don't have to make a
Really?
principal payment.
Really?
Yeah.
See? Now, I just found that out. Thanks for unveiling that on the podcast. You didn't tell me that a couple of days ago.
You guys haven't been paying attention during the training.
Yeah, okay, dude.
I
No.
mean, when it comes to rebuttals, when you were talking about, what if a client says I'm good? Clients that say I'm good, I've gotten them SBAs and lines of credit, just to have that cash on hand. So it really depends on who you guys are marketing to. I have MCA shops that send me 0% credit cards. I have I have a trucking compliance little side thing that I do, and I tap into that market, see if I can get them equipment finance. If you're just around the average lay person that does not own a business, you might want to push personal funding. Those fund fairly quickly.
Yes.
W-2 income. So just really think about who you're around and who you're marketing to, whether it's personal loans, they don't have businesses, whether they have a brand new business and you want 0% cards, whether they're well established, don't need the money, just get them an SBA because they're happy, it's long term and lower
Cheap.
rates.
Yeah.
So really just understand who you're talking to or who's sending you deals or where you're finding your deals so that you can learn what programs are your favorite with us.
All right, that's fire. Listen, ladies and gentlemen, we are, we're almost at that point. So I kind of want to wrap it up really quick and just do, final thoughts with, everybody on the panel. Sure, you just want to button this up, say how your week was, or just any.
Yeah, man, I mean, my week has been good, starting off, strong. But I just want to say to everybody signing up Broken Connection Group, just remember when you're calling your leads, just have that full confidence to know, like 95% of the people that are calling them they're one-trick ponies. They got access to nothing but merchant cash advances. You got an ace up your sleeve where if they're qualified, they're getting the best of the best. So just keep that in mind. There's so many different options you can present to them if they qualify. And it all comes down to understanding the qualification criteria and what's available for them. So you really have something special up your sleeve.
Nice. Sarah, final thoughts? We don't have you here often, so definitely I want to hear this.
Well, I think that, being in this business for a few years now with Jose and Stanley, you learn that there's ups and downs in the business. And I personally had a great week. We funded a few cards, everybody paid, funded a mortgage. So I think just this week taught me to keep hope, stay determined, and realize that this isn't, you have to really understand your clients. You have to follow up with them. Things aren't always going to fund easily. There's going to be some deals that take longer. So I would just say stay persistent. Yes. They always say it's a numbers game. It is true. Mm-hmm. So I would just say to, if you're going through a hiccup, to just stay positive because the turn is right around the corner.
That's it.
So I think, it's been a good week for us.
Jose?
Just
thoughts?
You know what? If you're doing this on a day-to-day, just keep a positive mindset, as Sarah said.
I said it too.
There's a reason why you chose this career, this profession. Make it a career, make it a profession. Learn as much as you possibly can about day-to-days in order for you to be able to have conversations. A lot of these clients just want to have a conversation that pertains to them. right? Go back into something relevant and make them not understand, but make them educate them,
Education.
teach them as far as to there's other options out there. And sometimes the options that they're looking for, they just don't qualify for.
Alrighty, and then that was good. And then
Daryl,
What
are
about
your
you,
final
Daryl?
thoughts? Yeah,
Yeah.
wait, Daryl.
How was your week?
Listen, my week was good. Between just deals that we had in house and our ISOs, we were able to get. Well, I personally was able to go ahead and sell 5 deals, get 5 deals done this week.
Clap it up for
No,
that.
I'm not gonna clap it up because that should be regular and that should be something that everybody should do, right?
Okay.
Set
the standard.
Listen, it was a good week, but 5 deals should be something that we should all be doing, right?
That's a deal a day.
A deal a day keeps the doctor away, right? I know Stanley says that at least. Now, just to button it up, I mean, ladies and gentlemen, really quick, the businesses that move fast, they win, right? Technology. Every year, people are looking for ways to make things
Faster.
smaller
Yes.
and faster, right? More efficient. If you're the type of client that, I'm sorry, if you're the type of person, the broker that's out here that you don't have the programs, you're gonna lose. You're gonna lose to a guy like me that's able to go ahead and get you to get your client the $250,000 term loan that'll take the $50,000 MCA as a bridge. You're gonna lose to me 10 out of 10 times. And that's because I have the exit strategy. You don't. Okay. Be able use your resources. Be able to leverage the people around you and the programs that you have to make you the most amount of money. And let me tell you something. You get your client approved for an SBA loan, they're going to give you every other deal that they have. They're going to recommend people to you. The floodgates are going to open. And ISOs out there, one key thing to take away from this, all you have to do is fund one person to make them a believer. You fund one person, you get them the money that they're looking for, they're going to refer you clients. They're going to come back to you over and over again. Takes one deal to make somebody a believer. Like these programs that these guys have on the real estate side, 100%, financing for these fix and flips, absolutely insane that we're able to get that done. And people are happy. You make them happy by getting them funded in layman's terms. But to finish up, the people that the businesses that wait to get funding, the ones that wait, they get left behind. And if you don't have capital, you don't have a business. Get the right funding now. Stay ahead of the economy. And ladies and gentlemen, that's it. That's it for this evening. Thank you so much for tuning in. Again, you guys could have been anywhere else in the world, but you guys are here with us. Again, I'm your host, Darren Mills, my boy, Jose Martinez, Sean McClellan. On the side, gang, we have Stanley. And then to my left, we have the lovely Sarah. Thank you guys very much for tuning in this evening. Have a great night, and we will see you next week.
Thank you, everyone.
All right. Good job.
Don't say anything yet. Still live somewhere else.
He said somewhere else.
Yeah, time for Rubik's Connection today.